Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about structural levels, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy guys.
Ernie, one thing I've noticed at these structural levels that you draw, and which I've learned to draw, the market, especially on the, say, the 15-minute chart, something small, either accumulates at that level for several bars or it literally sails through it. There almost never is halfway in between those two extremes.
Yeah.
Does that make any sense to you?
The fact that it finds that as a level at all is amazing to me.
Yeah, and at least if you use that level and you use it quickly as soon as the market gets there and it sails through, you're dead in for that trade. It's not going to make you.
At least for then. Like right now, it hit my level, it started to turn around, then it went right through it. Am I done? It seems like I'm done. Looks like, oh, damn, missed it. Going to continue going up. But the reality is it could turn around and then just that whole divergence thing could work out anyways. And it could end up, instead of coming from there, it could do that and come down. Those divergences are happening. They happened here. They started here. But remember, I said divergences are always ahead of the game. Always. So while that is also a structural level, there's one very close to it, right above it. That could be the one that they're deciding that they're going to turn around at. The same thing happened back here all last week, too. Many times it bounced off the top of the node, the red line. Other times it decided, no, we're going to do the line above. 2 lines above. 3 lines above. That red line is definitely more powerful, but does that mean that it has to be that?
It increases your odds as you keep looking at them. That's what I've discovered. Now I've dropped down to the XSP, just for the emotional, what should I say, lack of emotion of trading. And until I get the confidence that I have, which I'm getting, to go back up to or the SPX. And it's amazing how those structural levels are honored for so many times. It's like they're honored 70% of the time almost.
I'd say it's way more than that, just looking at this chart.
Okay.
It's almost, it's closer to 95%. This one, not so much. This one missed. This one came down to this level. It's almost all the time. I think it's more than 80% though. But even if it were 80%, that's still amazing.
Oh yeah, that's another edge besides the asymmetry, or in addition to the asymmetry.
Right. But the mistake is saying it's got to be this level. You can't say I'm 100% baked in that it's going to be this level. Okay, that's fine. But if it goes against there, don't fret over it. You're going to establish your position, just take it, and then make sure you put on a risk-adjusted trade that makes sense for your account. And if it bounces off that level, great. You'll be right and you'll make lots of money. If it misses and goes to the next level and then comes down, you could still be right. You just might not make as much as you thought.
Yeah, I understand exactly what you're saying. I'm beginning to adapt. So it's just been a long time. It's been frustrating.
I went through way more time than you did trying to wrap my head around the whole idea of probability and trying to stop being right. It literally took me 5 years. That's why I'm so adamant about it now with you guys, because I didn't have somebody pounding me every day. I would have someone pounding me like every week, right? So I wasn't getting the full force of it before I started getting it. That me trying to affect an outcome or prove that I'm right was the exact wrong way to act. You have to submit to what the probabilities are. Take your best shot and put on a trade, like you said, with asymmetry and a position size that is computed specifically to assure a certain type of result, a certain volatility of returns. And recognize that most of the time you're going to be going sideways. Wins, loss, wins, loss. And they're all going to be small wins, small losses. Then you get a bigger one, right? And it bumps you up to a different level. Now that's your new level that you're defending. So every time you move up that level, you defend that. Now you're going to be going sideways again. Bump up again, go sideways. And recognize that time where you're going sideways is going to be variable. Sometimes it's going to be short, sometimes it's going to be long. Doesn't matter. The only way that you get through it is just focusing on the process. The process will keep you within that band of reason of not losing and allow you to take advantage of the probabilities of when they do give you those opportunities to move up to the next level. But you don't change anything. It's still the same deal. It's just another data point. We have edge, and our edge is going to pay off every once in a while, and it's going to keep on moving us up.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.